Hello and welcome to this edition of Inside the News. I'm Elizabeth Okugo. In today's edition, we would like to take a quick visit to Nigeria and see some of the investment trends that are available for the global markets in the Nigerian economy. Nigeria has become a destination of choice for investors within the past few years. Despite the security and infrastructural challenges, the nation has found a way to sustain investors' interest in the fast emerging economy. We would examine some of the prospects and challenges considering the fact that the 2013 budget has just been signed into law. Do stay with us for this interesting ride. Describing Nigeria as an emerging market with lots of potentials, experts have advised that trading and investment in global equities, precious metals, forex, and so on will further empower the people and improve their chances in mitigating adverse effects caused by current and future global events. Learning about global markets and economic trends through education will afford Nigerians the opportunity to diversify their investment portfolios and to compete effectively in an ever-globalized world.
First is recognizing the way in which the center of the gravity of the world economy has changed very, very dramatically. And if you have countries like China that are growing at 10%, India almost, and now, in the last few years, Africa are probably the most dynamic economies in the world. Compound growth is a very powerful factor, and it does mean that the concentration of markets and economies is now shifting very radically. And that also must influence the way in which we negotiate about trade matters. 20 years ago, at the end of the last round of negotiations, the common practice was the European Union strikes a deal with the Americans, consults the Japanese, and everybody else accepts it on a take it or leave it basis. And that you can't just operate the world like that anymore. It's an era that's gone. Things have to be agreed and understood in advance by all the major players. And unless we do that, we're not actually going to make any progress in strengthening the global system. I think the second point I would make is the danger as well as the benefits associated with all of these deals that are striking up, regional, bilateral. I mean, they are positive, they are a second best to nationalism, but there is a danger of fragmentation. And I think Mr. Sharma's comments at the end are absolutely crucial, that we shouldn't lose sight of the fact that these limited regional bilateral agreements have to be subject to some overall multilateral global discipline, because otherwise we will drift back into the kind of very fragmented world which we had before the war with such disastrous consequences.
Some regions of the world, including the Eurozone, there has not been recovery. That has impacted the global economy very adversely, whether the developed countries or the developing ones. When we are viewing this particular subject, I would like to juxtapose it to three fundamentals. First one, today is the changing architecture, the multipolarity, which is referred to both by Dr. Vince Cable and Dr. Aganga. The north-south axis of capital flows now needs realignment, particularly considering the fact that 35% plus economic output of the world is coming from the developing or the emerging countries. And the projections are very clear that in the next 15 years, if not less, the emerging 7 will be equal to or will overtake the G7 economies. So therefore, the new order has to reflect, particularly the financial institutions, both the political and the economic architecture. That has to acknowledge that. Another important is about trade, but that trade again is growing, as was referred to, even after 2008-9, 20% growth. But that's not enough. When we look at what is directly impacted when there is a downturn, the social costs are enormous. Job creation stops, job losses are there, and even in developed countries, the richest economy of the world, the recovery has been more or less a jobless one. So the trade, what we have seen, the growth, developing countries today have 42% share of the global trade. And the increase, when we look at the same period in which the global trade has expanded, say by 4%, the developing countries' trade has increased tenfold. And it's not that the developing countries are trading only with the developed countries or the industrialized countries. The South-South trade has registered that growth, which we have to bear in mind. The second issue is of economic globalization, particularly in the context of the technology revolution, which is moving capital, moving goods, moving information at unprecedented pace from one region to another distant region. And there now today the new value chains are being created in the world. Look at the multinationals, the way they operate. They have their production centers spread across the globe. That's the value chain I was referring to. And the intermediate goods have become important. The developed countries would be importing at least 50% of the intermediate goods. In the case of emerging economies or developing countries, it could be 3/4. So therefore, what actually a country is exporting, the value addition may be very small or may not be that substantial. I'll give you one example. If Apple, this iPhone is made, then at least out of $144, I was told, $100 would be imports from Japan, from US and elsewhere. So 10% may be the value addition if it is made in China, that China would be doing that. And the third important fundamental in today's context would be the new order, the multilateralism. After the GATT talks were concluded successfully, the global trade is rule governed. That's through the WTO. What was required was to take it to the culmination through the completion of the Doha Development Round, which Dr. Vince Cable referred to, and I entirely agree with him. That unfortunately has not happened because of the economic crisis that hit the political appetite of the countries which have key interlocutors, particularly Europe and America. I feel that was lost, the political appetite.
The experts including Amro Zakaria, Managing Director, Market Trading Academy, MTA, and Steven Santomoris, Chief Business Development Officer, Worldwide Markets Limited, who are veterans of Wall Street, have added that to make Nigerians more aware of the risk and opportunities presented by the global market, they need specialized training programs to familiarize traders and investors with the world's largest and most active capital markets.
Anytime any market goes down in dumping, people often forget that there will come a time the market will pick up again. When our stock market went down, most Nigerian investors ran away. Foreign investors came to buy those stocks because they were cheap. As we talk today, ladies and gentlemen, we are back at where we were early 2008. Our stock market right now, as I speak, is dominated by foreign investors. I have privileged information sometime late November, early December of a particular portfolio investor that came with $3 billion and he said his clients mandated him to buy stocks in Nigeria. Now notice what has happened since the beginning of this year. From 2nd of January up until 31st of January 2013, the stock market equities have grown by 13.3%. 1 month growth, 13.3%. Now, I will just talk through this. You will get more details on my slides. Okay? Now, coming to the situation we are, as I said, foreign investors have again dominated the economy. And so, what do? What we came here to do is important. In fact, I thought there would be space in this hall at all. because what is happening here is very key. They take it seriously. Now, I had the privilege of a team of economists coming to ask me my views about the outlook for this economy this year. Where did they come from? From the US Consulate Office. And they said we need to do a report to Washington. So they track what is going on here to know how they position. But those of us within the system, we hardly do the tracking. Now those investors also track it, and based on what they find, they make their judgment and decide when to pull out and when to come in. Now the market is growing, and they are also watching how it will perform. Now coming back to the budget for this year, the government says it's a budget of fiscal consolidation, and then of course for inclusion, that is inclusive growth. So fiscal consolidation, we suggest that yes, we want to bring in fiscal discipline. So what is behind that? First and foremost, two major drivers of our budget. The price assumption for crude oil, then the volume we produce, which will determine the volume we export. So based on those two numbers, then you factor in the exchange rate, then you generate so much naira that we earn. Then of course we throw in non-oil revenue as well. So then on the other side, we now say, okay, we have created envelopes for different MDAs. So how much are we going to give to this MDA in terms of allocations for recurrent, in terms of allocations for capital? And then we put it all together, 4.92 trillion, presented with National Assembly. A lot of money. But as a business person, my own advice is this: when you hear such figure, what comes to your mind? Now what I think we should be doing is, if the government is going to spend 4.92 trillion this year, it will be foolish. I was in that before. It will be foolish to say, I don't want to do business with government. Because it is very tough to uphold good corporate governance principles if you do business with government.
Nigerian's Trade and Investment Minister Olusegun Oganga added that in most countries of the world, the services sector actually contribute the largest part of their gross domestic product. If we focus on services alone, it is a sector that can create a lot of employment for our people, apart from the positive impact it will have on our economy. He also said that the trade policy will focus on value addition. The idea is that rather than exporting iron ore, we want to export steel. Instead of exporting limestone, we want to export cement. So focusing on value addition will enable us to create jobs, generate wealth, and transform our economy. We have more on this.
In times like this, when you have financial crisis in the world, you look to trade and investment to be the driver for sustainable economic growth and inclusive economic growth, which is about job creation. So we all have the same strategy. That's the only way out. And so we're competing very well for the same thing. In 7 months, I've been to at least 12 different countries. And in those countries, there are 4 common things when we talk about investment. Investors are looking for good, high returns. Investors are looking for 4 main things: raw material, access to market, a market, technology, and capital. Technology and capital you can move anywhere in the world. Raw material you cannot move. Market you cannot move. Nigeria has about 167 million people. Gateway to ECOWAS about 300 million people. By 2070 we'll be the 3rd largest nation in the world, and the average age is about 18.6 years. When you talk about commodities, Zainab talked about agriculture, so I will lead that to agriculture. We're saying this is a country that is the 7th largest producer of crude oil, has between the 8 to 10 largest reserve of gas, has about 34 different solid minerals in commercial quantity, has about 84 million hectares of land, only 40% of that cultivated. So agriculture is fundamental and critical to us. And when you're talking about trade and international trade, there are, yes, the tariff barriers, but there are the non-tariff barriers. And that comes things like labeling, like standards, like subsidies. So I come back to your point about subsidies, and those in a way affect the development of such African countries.
But I think the world is changing and has changed, where people are looking at the fundamentals, which I did talk about earlier on. And at the end of the day, I think what we're all looking for is some level of sustainable economic growth. You deliver that through industrialization. You deliver that through trade. And I think, it's important that whilst we're looking at openness in trade, we address the shortfalls of liberal trade.
Let's build confidence in our economy and build macroeconomic stability. So whether my money is in naira or it's in dollar, I have no problem. Because that's one thing that drives capital flight. Capital flight is driven by loss of confidence either in the economy or in the macroeconomy of the macroeconomic stability. If you're afraid that the naira will depreciate, or exchange rates will change, or interest rates will dislocate, or inflation will run out of the window, you start moving your money around. So that is one. Number two is that this country must show that it is happy and needs your capital. They say love begets love, hate begets hate. If you show that you love something, that is likely going to stay. If you say I don't love you, even if you don't verbalize it from your actions, it will run. So let Nigeria husband capital. If you see somebody making an investment, you go to him and say, guy, I can see you're building a small factory here, I can see you're building a small kiosk here, I can see what can I do to help you? What can I do to, okay, this year you are employing 10 people, what can I do to make you employ 20? That sends a signal that you want me. And that's, I'm not taking my capital anywhere. But when you're not talking to me, I write you a letter, you don't know reply. I seek an appointment to see the minister forever. I want to see PAMSEC, no possible. So I say these guys, somebody calls me up in Dubai and say, hey, there's an opportunity in Dubai, I take my money out. So we must develop an inviting culture, a hospitable culture to capital. My people say, in our local parlance, you will go lock up bata. If you build a house for money, money will come into your house.
The most important thing about making exports viable now is for us to build a passion for it, interest, and support it. As a country, not just as secluded individuals in private pockets here and there, by promoting our indigenous products, selling our indigenous products. In Nigeria, can you count the number of Chinese restaurants we have? Our Chinese food, is Chinese food Nigerian food? How many Nigerian restaurants do we have in China, in India, in America? Every corner in America has a Chinese restaurant. And gradually from their food, they were able to penetrate other places. Now, look at what you use in Nigeria. What do you use in Nigeria that almost doesn't come from China? How did it start? There was a time when if you picked up a China thing, they said it was inferior. Now we intentionally go to China to import and bring into Nigeria. So it takes passion, it takes perseverance, patience, agreeing that you will do it wrong before you will get it right, and understand that it's all part of the process. You can't always do it right the first time, but we have to start doing it.
Well, I will say the government should give more attention to the issue of infrastructure, basically. Because once you renew infrastructure, you enable economic activities. So the inclusive growth that the government desires can only come through infrastructure renewal.
Now, non-banking financial services are those that are not banks per se. Now, banks can give money to private equity firms. There are companies that raise money from wealthy individuals to invest in different sectors. Okay? Now, they invest this money and they go to look out for businesses to invest. If you have a bright idea or you are running a business, they can come in and do that. We have a couple of them in Nigeria. African Alliance. Now, when ABC Transport, the luxurious bus, they needed to expand their fleet, they didn't have the money. They went to Capital Alliance and they raised about 300 million naira for 30% equity of the firm. And after 5 years, they took ABC Transport public. And then once they went public, they made their money back, and ABC is running. That is the kind of thing that private equity firms, banks couldn't do that, because the man will have a sleepless night. But once you get money from the bank, they don't care about the business. They don't even care. What African Alliance did was to put someone on the board to help re-engineer the company. They don't just give you money and leave you. They prepare you if they lack skill in one area. They'll tell you, you have to organize yourself, train some people, do something, hire somebody, and all that. Decisions are made, and the private equity representative is involved.
General discipline. It's not a law. General discipline. It's sense of discipline. Discipline from the government side, discipline from the public. And in between the public and the private sector is the enforcement of implementation. It's not a new law. We don't need a new law. We have enough of it. But we are not trickling it down, linking it down to the bottom because of lack of sincerity. So if the government shows sincerity, I think we'll go very far. More businesses will come up because opportunities will be thrown out. The environment is uncertain. The real determinant, over 80% of the determinant of this uncertainty is lack of power supply. So if you provide that, you've solved the Nigerian problem. We are hardworking people, intelligent people. The resources are there. If you heard them well, he said America is America because they're able to consume what they produce and produce what they consume. So looking inwards to produce and not import dependent, beginning to respect what we produce, even as they are, in order to encourage them to get better, open them up to competitiveness. We'll get there.
The Nigerian President, Goodluck Jonathan, recently approved a 4.99 trillion naira budget passed by Parliament, ending 2 months of dispute over spending plans. Though Africa's second biggest economy and top oil producer is growing in popularity as an investment destination, investors remain wary of the government's tendency to squander oil revenues through a combination of reckless spending and corruption. We have these views.
You see, I am a major proponent of public-private partnership because for a long time this country was divided into two, the economy, public sector, private sector, and the public sector did its own, private sector did its own. The private sector wanted to interact with the public sector. It's like they're doing them a favor. But I'm glad that over time we're beginning using the instrumentality of the Nigerian Economic Summit Group as a major platform, manufacturer associations, NECA, and all those business groups to bridge that gap. And that's what we're still pursuing, that if this economy will grow, we need the full participation of everybody. And since we have two main sides, private sector under public sector or under government, and then private sector, organized private sector, every effort must be made to continuously draw that relationship. And government is beginning to understand that it requires cooperation. And so from our private ranks, we are trying to push that frontier. Government has made a budget. That's the responsibility government has to draw up the vision, the plan for the country. Now, it didn't make this plan for itself alone. Every plan government makes, it makes on behalf of all the people of the country. But I found that over time, many of us in the private sector, non-governmental sector, just sit back and as spectators. We watch government draw a budget and we watch them implement it. And we have never felt that we owned it. So the objective of this seminar was to show that the federal government budget belongs to all of us. Of course, we have asked the government to lead us, so they have to come out with a plan. But if each person has a role to play, the private sector, is it in agriculture, is it in manufacturing, is it in commerce, is it in banking? There's a role for us for government to realize its objectives of growing the economy by 7%, of ensuring that poverty is eliminated or reduced, ensuring that employment increases. Those things require the people, the private sector. Government doesn't create jobs. The business of government is to create an enabling environment so that enterprises can establish and enterprises create the jobs. And it will take the entrepreneur who creates the enterprise to understand what the government wants to do so that they can take advantage. It takes the government to listen to the entrepreneur so that the government knows what to do to attract the entrepreneur. And both sides understanding itself, working in a cooperative manner, then this economy will move. That's what we're trying to do.
The government already has good ideas, good plans. Programs are there, initiatives are there. The question is the commitment to these initiatives. If they can be committed to the initiatives, if they can be sincere with the desire to implement, if they can give freedom to the agencies and other organs appointed to ensure implementation, especially the Sure P. You see what has happened there. Many people do not know that. The BOI, the Bank of Industry, and all that, if they can allow them the freedom of implementation gathered by regulations, the financial sector, I think a lot of transformation will happen.
Challenges are what we believe that policies and legislation can overcome. Through policies and legislation, we can be able to institute parts of our revenue, national revenue, into areas that will actually benefit SMEs and grow our indigenous products. Because if we don't grow our indigenous products, we cannot survive on imports alone. We must have something to build revenue. Very soon the world would not be buying crude oil anymore. And we must need to have export products. Even Cameroon exports banana. We don't export anything from Nigeria. Our slot in AGOA has been vacant for the past 15 years. The records for 2012-2013 showed that Nigeria did not export anything, just 0.1001%. All the other exports was oil, petroleum. I'm talking about authentic reports from the American embassy. So, where is the export? We're not talking about people like carrying bags of cassava, and when you're going to visit your sister in UK or America, you carry crayfish in a bag and then you go and you sell from the boot of a car. No, we're talking about real exports. And we're not yet doing that. And we need a lot of money. Nexim Bank wants to support and all those things, but we need the right channel to do that export.
The budget was based on an assumption of a $79 per barrel budget oil price, higher than the $75 per barrel proposed by President Jonathan. Any money earned from oil over and above the benchmark price is deposited into the savings facilities called the excess crude account. Any increase in the benchmark price therefore reduces savings and makes Nigeria less resistant to oil price shocks. The budget assumes oil production of 2.53 million barrels per day, up slightly from 2.48 million barrels per day in the 2012 budget, and at the top end of actual outputs this year. It also assumes economic growth in 2013 will be 6.5%, inflation 9.5%, and assumes an exchange rate of 160 naira to the dollar.
Based on the above, and in line with government's medium-term strategy, the share of the recurrent spending in aggregate expenditure has declined from 74.4% in 2011 to 71.5% in 2012. The deficit is 2.85% of GDP, which is in line with the provisions of the Fiscal Responsibility Act 2007, which pegs this at 3% of GDP. The goal of achieving positive macroeconomic stability is no end in itself. The robust growth experienced in recent years needs to be translated into tangible and concrete improvements in the living standard of our people. In this respect, the government is focused on investment in priority sectors in order to sustain economic growth and create jobs.
The question is, what opportunities are available from the 2013 budget that the President just signed into law?
Basically, the investment climate is song we sing all the time. that the government, because the government has all the things under their control. We're talking of 5 trillion naira budget for the year 2013. I mean, all of us manufacturers, I mean, other private sector people, I mean, we have to deal with the government. So, and the government needs to continue to help us. I know they are trying, but they still need to do more. So, like the area of power is still very key. Yes, there is some progress there, but it's still far from where we need to go. So that must be done. Issue of security must be sorted out so that people can free to invest, whether they are local or international investors. They should have that one. Then the issue of transportation, the roads, the railways. I know efforts are going on in this area. So we just pray that there will be a continuation of this effort, sustenance of what is being done, so that there is no policy somersault which has killed many companies, which have killed many investors, that we can continue and progress. And thank God, I mean, this is a government, we still have at least 3 years to go. We hope if they continue with the way they are going, at least by the end of their term, we can look back and see that, okay, we have moved substantially.
The immediate lesson is for us to begin to look inward, to review all our policies, and begin to focus on making policies that affect the people. Let's have some low-hanging fruits, and until we do that, you know, people cannot wait a long time for government to meet their needs and all that. The expectations are high, and because of the knowledge economy that we are now, everybody wants everything fast, you know. So they should have some low-hanging fruits, focus on not too many areas, and just face education. You know, get it massively so that we can compete in the area of education. If it is infrastructure, create accessible roads, or create, you know, fix power which they are working on, and you know, and let every state, even community, generate their own power. Okay, it's not a national thing. It takes long. A lot of money have been put in there, but nothing to show. If every community is allowed to, you know, Lagos State, for instance, want to generate their own power. River State wants to generate their own power. Even Dangote is generating his own power, which is cheaper for him. So if all could do that, then the power problem will be solved faster than having a government involvement that will take long and all that. You know, and then you go to the issue of industrialization. Yes, Shopee and your wing programs, they're okay, but they're not enough. You know, so we need to encourage private equity firms and joint, what is it called, the venture capital firms, to take some of these things up, to work with entrepreneurs, see the ideas. Banks channeling money. One of the challenges, bottlenecks we have in funding entrepreneurs is the money is meant for them and being channeled through the conventional banking system. And that is not what will. If you channel through non-banking financial system and encouraging the establishment of all these things, that way we'll be able to have a quick intervention in that sector. Because one is the banks are conservative. They might not take, they're not set up to take that kind of risk that you know, these equity firms, private equity firms can take. You know, so it's important we have this, you know, quick wins, you know, some low-hanging fruits, so that we can get out of, you know, get out of this thing. And then policies, management of government policy is very, very critical, even more important than implementation. You know, so that, you know, you manage this policy and make sure there's a consistency in policy. Sometimes government comes up with policies like they forget they have made this policy, and they come up with a new one that is, you know, contradictory to the original, like giving you a gift with one hand, using another hand to take it back. You know, so these are some of the things that government is not consistent, and we need to review all this. Management of the policy is key, and you know, so that we just choose these three areas. If I were President Jonathan, that's what I would do.
Three things. First is that government must ensure that the regulatory and legal environment, the legal and regulatory environment, are promotive to investment. That people feel that if they bring their investments here, their investments are safe. If they have intellectual property, nature which is protected, they can do their business with minimal harassment, and they can get their money out when they make it. So that legal framework, if you offend me, I can take you to court and get redress. They don't want a system where the case will start, you never know when it will end. They want a system where there's the law of the jungle, the survival of the fittest. So they want a fair regulatory framework where things are spelled out, conditions and regulations are clear. That those regulations are promotive, not inhibitive. 2, they need a physically safe environment, because self-survival, personal survival is critical to everything. So safety of lives and property. Government is working at it, needs to do more to make Nigeria a safe place to do business. Number 3, having created the regulatory and legal framework, created a safe physical environment. The third is to apply incentives. Every creature, be it man-made or made by God, responds to stimuli. We're attracted where there is going to be a benefit. Everybody seeks what is best. You know, you can't find where you have a better opportunity, you go for where you have a less opportunity. It's not normal. So this government and the people that rule this country, both at the federal, the state and local government, must compete for investment capital, both domestic and international. And what they do is to put incentives, something that will allure, something that will attract us. You know, it's okay, I give you 5 years tax-free, pioneer status. Come and set your business, I'll not take tax from you for 5 years. Okay, come and set up your business here, I will provide electricity for you. Okay, I will not ask you to pay for land now, but you pay for land over 5 years after you started making profit. You know, so forth and so on. They're called incentives, and that's what when the man sees that and say, wow, he calculates what he's going to save in taxes for 5 years. And like if he went to this state or went to this country, say, let me come and do it. 5 years, I've made enough money, I'm ready to pay tax. That's the motivation to come. To use that to allure him, but you gain in the long run. As somebody has said, if a man builds a road here, if an American builds a road here, if a Japanese builds a factory here, he will not roll it up when he's going. So it will stay in our country. So those 3 key things, liberal, application of liberal incentives, in addition to the other 2 I have said, will change the color of this nation.
In India, they started by doing their own car, which was a terrible car. In Japan, they started by doing this Toyota you see now, we are all not very good cars. Shares not very, Chinese products, you heard that. Today, China that was just 3 years, 4 years ago, my inferior China is now qualitative China. If you have option, you go for option. Looking inwards and being sincere and committed to whatever goals we have set out to achieve.
The government allocated the lion's share of the budget, 668.51 billion naira, to security, indicating that tackling Nigeria's many security challenges is a key priority. However, many companies should prepare for increasing insecurity in hotspot regions, as violence is likely to increase if the budget is spent on recruiting more personnel into badly managed security forces that crack down brutally on dissent rather than on investing in better management and training. Nigeria's security challenges include bombings by Boko Haram and ethno-religious clashes in the northern and central areas, kidnapping, oil theft and piracy in the Niger Delta, and kidnapping in the southeast. But the violence is about Nigeria's acute social disadvantages and widening wealth gap. A lot of analysts believe that for Boko Haram, the group's frequent attacks cannot simply be attributed to Islamic militancy, but rather long-standing socio-economic grievances and skyrocketing unemployment. The group is fighting the government, which it blames for the precarious economic situation. As a result, the group wants to install Sharia law because it believes secular law is too corrupt and only religious law can establish order. The agricultural, construction, power and downstream oil sectors of the Nigerian economy are good investment outlets in 2013, says Bismarck Rewani, Chief Executive Officer, Financial Derivatives Company Limited. Huge investment opportunities exist in commodity trading, processing equipment, financing and trade finance in the agricultural sector. He also expects that the government will continue to offer policy support to the agricultural sector in 2013. The agricultural sector, he disclosed, is the largest contributor to Nigeria's economy, making an average contribution of 40% to the nation's gross domestic product. The 2012 with an average growth rate of 4.2%, down from 5.64% in 2011.
The Africa's trade with the rest of the world has gone down from about 10% in 1950 to 3%. The volume of trade has gone up. The only difference, the reason why it's come down from 10 to 3% is because Africa has remained at the lower end of the value chain, exporting raw materials, exporting job opportunities. That has changed now. We want to add value and want to industrialize. No nation has moved from being a poor nation, a poor nation to a rich nation by relying entirely on exporting raw materials. It's to industrialization and the service sector. India, by the way, has now become, if you look at the influence today, US between 2006 and 2010, US was #1 trading partner to Sub-Saharan Africa. Euro was #2. Britain or UK was actually very strong, but it's losing its traditional position, was losing its traditional position. But in the last 1 year or two, we've seen a lot of dynamism from the UK part of it. But more importantly, just this quarter, we're seeing India. India has now become the #1 trading partner for Nigeria. And I must congratulate him for that. So I think that's part of the openness of that.
Federal revenue allocation constitutes something like almost 80% or 90% of state revenues, because the tax base is very low and tax compliance is also very low. So internally generated revenues are pretty low compared to federal allocations that come to the states. However, some states, the states' performance are relative. Some states do pretty well. Lagos State, for example, does about 45% of its funding from internally generated revenues. River State does something like 20%. But by and large, the federal and state economies are dependent on the amount of revenue they receive from the center. Strategically, it opens up Nigeria for competition. That is, there are Western investors, European Union investors, and Chinese investors. So Nigeria can pick and choose and can negotiate from a stronger position. Secondly is that the more diverse your investments, the safer and more stable it is, so you're not vulnerable to shocks. So that what has happened in the European Union, for example, now will not affect directly the Chinese investment in Nigeria.
The issue of access to credit is a very, very, very big problem. People don't have access to credit. Investors, we know them. I mean, entrepreneurs, small ones, and they don't have access to credit. The conditions are too difficult for them to meet, and this is an area that we must tackle. I mean, if we want all over the world, SMEs are the engine of growth in any economy because they employ more people. Look at graduates that we have everywhere; they're unemployed. I mean, this saddens me every time. It ought not be like that. We should be, but there's room for them. If there's people have brilliant ideas, but then they don't have access to funding, you see, and the conditions are made very difficult and unattainable for them, and they get frustrated, you see. So the environment is not conducive enough, but I think efforts can be put into it to improve it. And I'm a very positive person. I pray daily for this country, Nigeria. Nigeria will make it. We will succeed by the grace of God. Just solve all these problems and then we will succeed. We have all that it takes for this nation to grow. There are various opportunities to grow. And people all over the world know that Nigeria is the next place to go. I believe we want to be big ones. No doubt about that. God will help us and see us through.
In closing, we would like to say that the identified risks likely to be faced by investors in the sector, which include foreign exchange volatility, interest rate movement, and a global decline on commodity prices should be tackled by the relevant authorities. In addition, there should be focus on infrastructural development by states and the federal government, adoption of privatization, and instrument of government policy and improvements in regulations on how business is done in Nigeria. These are all factors that will make investments in the Nigerian economy worthwhile in 2013. This is where we draw our curtains in today's edition of Inside the News. I'm Elizabeth Okugo. Till we come your way again, same time next week, we would like the nation Nigeria to sustain the high tempo of investment opportunities currently available in the country and to maximize them. This will enable the whole nation function on a more global scale, talking about global economic opportunities. Thanks for staying with us.